hope that you are doing well, and welcome to this week's weekly forecast. Quite a few exciting potential moves shaping up. What we're going to do today is we're going to look at quite a few different pairs. So I'm going to keep each pair's analysis quite short, but I'm going to give you guys enough detail to kind of give you an idea of what bias we're looking at for each pair. So the pairs that we're going to look through today, we're obviously going to look at the dollar index, which I have open in front of me. We'll have a quick look over AU for AUDUSD, EURUSD, and GBPUSD. And then what I also wanted to look at was Aussie Kiwi, Aussie JPY, Euro New Zealand, and also GJ. So it's quite a lot we're going to look at today, guys. So let's get into it. And as always, if you like the content, please like, comment, subscribe. You know what to do. I'm very excited about the Invest Desk dropping on the 1st of September. A lot of registrations, which is what I like to see. So let's hope we crush the markets this week now. That's my focus moving forward. So perfect. So let's highlight first what we're going to look at with the dollar pair. So dollar index is obviously still very much on its trend. However, what we have found on the daily and also when we see it on the 4-hour is we may have found our bottom here. Now, why do we consider this our bottom? Well, there's a couple of reasons. It's obviously a very key support highlighted throughout here where it's held the pair, acted as resistance, which then took the pair down there. And it's the first support line that's come up since we've broken this huge weekly trend line structure. So buyers are going to look to kick in here. Now, where did we get the confirmation on Friday? I talked about it potentially going long. Originally, what we saw was, one sec, let's get my clips. We saw this breakdown here. We broke down beneath support here, but buyers quickly took that pair back up and it did not remain below support. Quite clearly, what that indicates to us then is we're looking at a potential false break, obviously identified by the huge bullish engulfing on the daily. When we crack down into the 4-hour, what does it look like in the 4-hour? Very clearly here, you can see, yes, we've come down to create a new low. We've broken back up above support to create a new lower high, so it's still bearish. But as soon as this price action occurred here on the correction, as soon as it came down to retest that support, we did not continue to break down lower, and we did not make our way to make new lows. So instead, what we found was this supportive structure, which actually created a new intraday low. And you can see how that's reacted on the daily. Again, it's the massive bullish candle, and we've broken back above support, and it looks to be holding now. So like with any false break, you're going to be looking at quite a strong move to the upside. Having said that, I do think there's still quite a lot of resistance in the way for the dollar index. What my main point of sort of retest area would be this area up here. We obviously have a nice confluence here of the 94 level, which is a key resistance. We have our descending channel structure, and then we also have this weekly trend line structure, which if I zoom out again, like I've highlighted before, is this trend line from our 2011 lows. So quite a strong trend line we've broken there. Obviously, this is my main objective for the dollar in the long term. I think we will see it, but we may be in for a little reversal. So little price action monitoring. So what we would be looking for is, obviously, we've got this little bullish channel forming here. So using our Fibonacci's from each high to each low, or from each low to each high, we can look for potential retracement zones. And if we find some bullish price action on that, then, we can make the expectation that the dollar is going to remain. I think it may remain within this 4-hour channel, hypothetically, until it kind of comes up to this confluence up here, which could be, a definite possibility on a sharp rally coming out of the false break. So how does that translate into our pairs? Well, we're obviously already shorting Euro USD. What I noticed on Friday was obviously there was a correlation across reversal patterns on XXX USD pairs. So Euro USD here, we saw a nice head and shoulders formation forming here. Obviously the right shoulder forming at the 50 retracement. We saw the breakdown here on the neckline. We've broken down, hit our first Fibonacci extension support, and we've coming back up now to retest this resistance level with this nice little sort of shooting star formation coming in on the 1-hour here. So keeping in mind, this is a correction. I do not think that this is going to turn into a full-blown bearish market for the euro dollar. Likewise, I don't think it's going to be a bearish market for GBUSD necessarily. I think what we just need is, obviously, we've had this huge impulse. We've had the huge impulse retracement, and we've had this another huge impulse, but we're yet to have a retracement on the impulse. So I think we're going to look for that correction here. And I think the correction is going to come here with the head and shoulders. If we look at our measured objective on the head and shoulders, so the measured objective is the technical way to measure a target. We're looking at our neckline up to our head. So we have 171 pips. We bring that down to 171. We just put 168 or whatever. And we put it from the breakout of the head and shoulder structure. We can clearly see that this breakout lines up beautifully with the full swing of this right shoulder. So technically, there is a very strong bias that this target is going to hit. It's the measured objective of the head and shoulders, and it is also the full swing of our fib from this high to this low to create the right shoulder and the breakout. So there's a very high chance of that probability. There's a very high chance of that target being met. Looking at a weekly level, you can see that it is a strong area of support for the pair, and also found resistance here as well. So I like that. I think there may be a bit more of a pullback, to be honest with you. If we take our fibs on our weekly levels from this last impulse, which we just snap it in there, and we bring our fibs up here, you can see that if I unlock coordinates, my 382, you can see how that lines up perfectly with the 382 retracement, which is what we can expect on a retracement. Before we may see the bulls take it back up. We may see a bounce to the 23 and then further extension down to the 62. Obviously, that 62, there's a lot of potential there purely because, it is obviously the highs from back here of the breakout from here. But for me, I'd like to take it safe. It's still a good target to aim for there. And then we judge price action on the intraday target to make an assessment. So that's how we're playing Euro USD. I think it's a solid trade. Let me just get rid of that fib so I don't mark myself up. So yeah, Euro USD, that's how we're playing it. Aussie USD, I'm not in this trade right now, but we can clearly see a super overextended Aussie here. We had this little corrective wave here from this high to this low on this last impulse, but we're yet to have a pullback on this one. Let me just Control Z. So we take our fib from our last low on the weekly up to our high. We can see that there's potential for here to retrace to meet down this support level down here, which would be here. So I've already marked this up because this is where I would like to get into it. I would like to get in on a retest of this level of price action here. And what I'm actually looking for, if I get rid of this and I go on my weekly, and I take my fib from, get out of here. I take my fib from there to there. From this last high to these last lows here. Obviously, I just need to drag this across a little bit. That's our weekly range from last week on the pin bar on the I don't know, whatever it is. It's our weekly candle last week from the high to the low on the bearish candle. So I would like a retrace to basically retest this level of support, this level of resistance, and it's also the 50 extension of the Fibonacci levels. And we can see how it lines up. If we get rid of the 3.8 and the 236. We can see how that lines up nice here with the negative 62 extension. And that is also our daily trend line structure breakout as well, just to keep you guys, just to let you guys know. So in my mind, that would be a good play on a short on AU, a rejection of these highs on the retest of them, and also a 50 extension. I'll be watching that one for price action. But the risk reward is pretty good there as well. If you want to do a full swing on the move, which is obviously down to here, which was the Fibonacci extension, Fibonacci retrace on the weekly, as well as as well as our weekly support within the range here, from here to here. So I'd actually aim for a long on the swing target there because I think that's good potential on that trade as well. We would be breaking out of this channel here as well. So for me, that's a nice little trade. I'll be watching price action for AUD USD on correlation with the DXY as well. GBUSD. Again, we had this sort of double top formation forming here, yet to be, well, we're technically not below the neckline yet, but how I wanted to play this again on the short, using our weekly fibs from the last low of the impulse, which is here, put it on snap, and we're going to bring the top of our fib not to this, because that could be a fake out on the weekly, right? This one here. So it's to where we found resistance. So I'm going to leave it there. Actually, I'm going to go to the red one there. So we have this range here, and we can see how our Fibonacci target of the 38 extension from the pullback lines up with this area of support for the pair here. So I think that's a good shorting target. Obviously, you could hold the extensions down to here. Should the market have a healthy pullback, that's the levels that we may be looking for. So what do we do from here? Like I said, if we do not break that low and we do not end up doing a double top, instead, what I would like to see on the weekly candle for this week is obviously from this high to our low here on last week's low. I would like to see a pullback into the 50 retracement, which is our resistance level up here as well, highlighted here. And then here. So I would like a bounce and a retest of here, and then looking at the swing and the measured objective of that 50 retracement also lining up with, well, maybe to here even. That's what I would like. It's a nice little move there. Hopefully we see that happen in terms of getting the pullback up to this level. Otherwise, what we might be looking to try and get in on it is a breakdown to here, retest to here, and then try and get in short to at least there. We're still going to give ourselves a potential 170 pip target. I think we could have a little smaller stop. That would be another entry on there. So a couple of, we just need to monitor price action realistically, and then obviously look for some bullish constructive price action down here in line with some Brexit headlines about how everything's fine. It wouldn't surprise me if Brexit ends up being not as hassle-free as people, not as hasslesome as people assume. So that's my two entries to get in short on GU, how I've played GU. Looking at, okay, cool. So that's all of the USD pairs. Like I said, we're looking for correlation on the DXY on that. Looking at AUD JPY, very interesting trendline structure break here. Not only that, but if we're looking at a weekly level here, we have what could potentially be a really sexy inverse head and shoulders forming as well. Obviously, we had this huge breakdown here, but we are yet to break these last highs. And whenever we have an equal high like this, then we could expect a potential pullback into a sort of reversal formation like this. Obviously, looking at the weekly, it was quite a strong engulfing candle on the weekly. Not only that, guys, but when we draw our fibs from this low here to our high point, to our highs here, you can see how the 50 Fibonacci extension on the monthly lines up with our wicks on our left shoulder and also the wicks of our resistance from down there. But here is where we'd be looking for. So I'm looking to get short on AUD JPY. However, I think that it still has a little bit of tomfoolery to do in this area up here. You can see how we didn't break a new low necessarily here. So what are we looking to do on this pair is quite simply, again, on the last weekly candle, we're going to mark our fibs from the high to the low. Why do we do this? Because if price breaks above our fibs of this week, then we could be looking at a bullish weekly close, whereas we're looking for a bearish scenario to take place. So we may have it come up to retest here, which is obviously one second. 79 Fibonacci extension, and I have another line here. What is this line? And also it's our highs from back here, so another strong resistance point. But I am looking to sell this pair and I'd like to sell it for quite a while, to be honest. It just depends if it gives us an entry. My long-term objective on a sell on this pair would, like I said, would be this retracement down here. And get rid of this. Would be this 50 retracement down here, but short term, because it's quite a large impulse move, maybe even the 26 Fibonacci with our stops. That's a good ratio right there, obviously not. So obviously looking at intraday pricing, I think that gives us a nice objective to get in, but maybe be conservative initially, because I think that once we hit this support on the breakdown, anything can happen. So we've just aimed for that support. What's our ratio? Not that good. Let's bring this motherfucker down. There we go. Yeah, so that's what I'd be looking for in Aussie JPY. Obviously, we have quite a lot of bearish signs, but Aussie can be a bit of a pain in the ass trying to sell it. So we'll see equities looking like they could do a bit of a correction this week. That's how I'd be looking to play it, just in the short term. And then once we break below this level here, we could look to add shorts down to our more long-term target down here. What we need to do first is establish that we're in a bearish structure by creating a new low and then creating a new lower high as well. So until we establish that structure, we have to be quite conservative with how we trade it. Aussie USD is another great example of what I want to trade. Obviously, trading the pullback is not always ideal scenario, but we have a great impulse here, and we are yet to have a retracement to any of these highs here. So impulse is obviously moving up here, so we layer our Fibonacci's. We can see on the weekly quite clearly that our 50 extension from the low to the high lines up perfectly with these highs here. So it's going to be a great target. Breaking it down to the daily, we had our impulse here. We found some resistance. We've come down, found some support on the 23 Fibonacci of this impulse, come back up, found again the resistance, and inside that daily pattern, it is giving us a 4-hour double top. So what I'm doing here is I'm quite simply going to play any broken level here with a retest, and then I'm just going to be trading it down to the 50 extension for this week. That's going to be the pullback I think is going to happen on AUD New Zealand. It's quite a simple setup. All we need to do is basically wait for price on an intraday level to provide us our entry, which again will just be a retest of the broken neckline before coming back down to here. And then I expect that there may be some buyers who come into play. So that would be an opportunity to buy down there potentially as well. But for me, my aim is to short that. So what I'm going to do is when we get to here, add an alert. Oh, and there we go. Trading Views just put my alert in. So when I hear that price action alert go, it means it's time for me to be watching that chart. Euro New Zealand, very similar situation. We've got a double top formation coming into play here on the daily. Obviously, it's a little bit messier right now, but what I was looking to do was on the impulse of our weekly move. So from this low to this high, yes, we've broken some key levels here. So essentially what I'm looking for is a break of the 236 Fibonacci, which ideally would give us an entry on, I think, yeah. Anyway, I'm looking for a break on the 23 Fibonacci here to get back in this range, which we can see has been in play here on the downtrend. So once we break this low here, any pullback into this resistance area, if it confluences with the Fibonacci, I'm going to be looking to sell that. And then obviously on the weekly, We have a 50 Fibonacci here, quite a strong level. This is a first impulse. We're looking to sell the correction before buying the next impulse. I think that we're going to be buying. Obviously, funds are super net long right now, euro, and that's still the case. That doesn't mean they'll cover some shorts this week or take some profits, right? So on the daily, what matters for me is a break of basically these lows. If we want to even do it from here. Just mark Friday's low, whatever, daily. Yeah, that's looking juicy. That's looking like a real nice short right there. All right, Euro New Zealand, baby. Let's get the shorts in next week, and then we get the buys in, and then we'll short again. Because I think we're maybe going to have a bit of downside here, maybe. So we get, I don't know, we'll have to see what price action goes, but we're ready to take it as it comes. Let's get a bounce down, sell down to here, and then we can probably get a retrace to retest broken potential neckline as well as our 236. This could be our opportunity to add more shorts. If we are aggressive and we sell on the breakdown here, and we kind of try and preempt the break, which we could do. I'm all for being aggressive sometimes. What I'll do is I put 1% on here. Should it plan out, we get down to here, keep holding. Once we come down here, up to here to retest, and if we find some resistance along these fib levels here, which we can clearly see exist, if we come and find some resistance there, we could add, if we find the right price action there, we can add another, couple of percentage onto that trade at a shorter stop, and then preempt the move on the impulse correction, and then another impulse down to our Fibonacci extension. So let's keep on top of that. I'm going to put a little alert in here again. Alrighty, Euro New Zealand. So that's how we're going to play that bad boy. GJ, same situation. Looking to get short on a correction here. The correction is obviously from the impulse here, from this low here to this high. Here we can see our 50 extension lines up nicely here to here. If we put one more fib from here to here, you can see our 60 actually lines up. So this would be a good target, and this is why I've aimed for this target here. Obviously between these areas. Now, why have I also aimed for these targets here? Let's get rid of this fibby fib. Let's get rid of both these fibs. On the weekly, we have drawn our fib from our swing high on last week to our low for last week. And we can see that we have broken intraday trendline structure. We are bouncing on a larger trendline structure. I expect us to find resistance here at this confluence. This actually looks like a really good trade. I expect us to find confluence here on the 50 Fibonacci, the trendline structure, and then my play is from here. We may get a bit of kerfuffle, but we could break down to here to test this support again. If we draw an imaginary Fibonacci if we draw an imaginary fib from here to here. We can see how, just to say that we formed a new high, lower high here, and we formed a new lower low here, and we came up to retest this area of support here. This is all fictional until it happens. And then we came up to retest from this breakout here to retest this level here, which is a high probability. We can see that our swing targets on these fib extensions from this actually printed leg to this fake leg, they all line up to the swing target. And that swing target is, of course, let me just delete the right fib. That swing target is, of course, we'll do it from this low to this high. It's our 62 Fibonacci extension, and it will also be a retest of these broken weekly highs here. So there's a nice confluence of support there to aim for as well, guys. So I think that's going to be a fantastic trade and one to watch out for. So we're looking to sell. We've been buying a lot these last few weeks. We're looking to sell now, guys. I think that, we're quite cooked on GB. So I think there's going to be a bit of a correction in the play. Same with dollar, same with Kiwi. Sorry, not Kiwi. Same with Euro and same with AUD. I'm gonna avoid CAD next week. I don't want to trade CAD next week. So that's gonna be my focus for the weeks, guys. Let's keep it going. Let's have a really good week this week. I'm super excited for the week. I think we're gonna crush it. We're prepared. Hopefully you guys learned something from this. And like I said, guys, let's keep the community growing. Like, share, do whatever you need to do. I appreciate all the support all of you guys are giving me. And, I'm really looking forward to the new platform and being able to get stuck in with you guys and help you guys really mature as traders. Anyway, guys, that's it. This week's forecast. Like I said, like, comment, subscribe. Let's get this rolling.